Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the little bounce on the stock market as well as just the holding position on crypto. You can see that crypto is still largely in the red with Sol, FTT, Hex taking pretty sizable hits and chunks out of the market there. If we do look at stocks, we can see that it was a green day. Of course, that is coming off the measured move of that rising wedge that I've been telling you about for the last couple weeks. And so that should have been no surprise that we did have a measured move to that rising wedge. And now we're getting a little bit of a bounce in those areas that we did point out for the stock market. The beautiful thing about the stock market is I don't have to review it that often because we have just been almost pinpoint precision on every move along that thing, and the Alpha Fam is just killing it over here on the stock market. If you guys want to check out some of the week's major economic activities, you can see, of course, we are coming off of that Christmas holiday. Basically, trade and goods did see a little bit of a fall there. We do see the home price index still shrinking, however, not as fast as the previous pace. We do see that the home price index did get a little bit of a rise, but pretty nominal, I would say, compared to the single digit percentages we've been seeing previously. We do see that pending home sales, basically in line with last month, but significantly lower than the projection of 1.8%. So the home market still taking pretty big hits overall. And, those guys in real estate probably aren't too happy about all of that. But hey, we did have a top of the market on home sales, and it's only probably the lack of inventory that really keeps those prices up there, which is kind of a shame against the U.S. and much of the West that we're not keeping up with housing. Of course, we do have long-term demographic problems, in many countries around the world, and so I can understand why maybe we're not building at the rates that this generation needs to build, because in the next generation, we're probably going to have excess inventory at the rate of which, families are starting to shrink with people having less kids. But, for right now, that doesn't feel too good if you don't have a house. And if you did buy at the top of the market, it also doesn't feel too good right now. But you can see that overall prices are still rising just because of the tightness of that market. Guys, we can see that initial jobless claims are increasing steadily. Last measurement was 216,000, and the projection was 223,000, but instead we got 225. So 225,000 jobless claims is probably what Jerome Powell wants to see, the Federal Reserve wants to see, to start seeing that economy cool off. Now, we did have two jobs open for every person willing to work in the United States. So, jobless claims, I don't like that necessarily, that measurement, because that suggests that people are leaving the workforce. But really, what we need is people to enter the workforce and for companies to basically cool down and stop opening new divisions that's causing hyperinflation on wages. We just need people to get a regular job and for companies to back off with all of their overheating of the economy, which came with all that free money, all of those 0% loans, that almost infinite money printing, where you just get you could go to any bank. These businesses could just go to any bank and get a 0% loan to open up a new division and hire as many employees as they want. And so they could pay whatever, people, whatever the market was demanding. And then because all of these companies were doing that at the same time, after the opening of COVID, we just saw, inflation just skyrocket based upon wage growth. And so there is a tricky dynamic here because as the Fed puts pressure on the market, of course, that is going to kill real jobs, not just those kind of hypothetical kind of investment jobs that came out of that free money. And so, this is going to slosh around for a while. It's going to take a while for all of this to sort out. And it probably won't be until the end of 2023, maybe even into 2024, that the jobs market really gets regulated. And that's at no fault of the workers. I mean, this is really one of those terrible situations where it really was the elites, both, especially in the Trump administration, but also in the beginning of the Biden administration, where they were just printing money via 0% loans offered to businesses. And usually we think about the money printer, where the Fed is just like, actually printing dollar bills. That's not really how it works. Basically, the Fed tightens or eases conditions, which allows money to flow into speculators and investors and everyone else out there. And so that extends the money pool. And what the Trump administration did basically during COVID is they just turned on the unlimited switch, and they also were cutting taxes at the same time. So you had unlimited money going out, nothing coming in, and that was just a recipe for economic catastrophe, where we are seeing now hyperinflation like in banana republics. And that's what Jerome Powell is now fighting in the Biden administration. The Biden administration was about a year late to get in on this, and so basically, shame on both parties, and especially shame on the Congress, which allowed this to happen. And didn't really have oversight of that, Fed, which really is one of their responsibilities. They can call in those guys at any time, but they were just excited to get all of their spending, and so really shame on both sides. And I don't think any of the people who were involved in those decision makings during those times should necessarily be rewarded. Just my personal opinion, a little bit of a rant there. Guys, we do need new leadership in this country. We do need people that have a vision for the future of this country. And so far, I'm seeing a lot of backwards thinking, both on the right and the left. Some type of just a fake idealization of the good old days, quote unquote, which of course was based on the back of World War II. Of course, you have Europe crushed by World War II. Of course, you have the Soviet Empire collapsing, right? Of course, you have, Japan bombed, right? You have all of, the Korean War. You have all of this stuff going on in the rest of the world. Of course, the U.S. is going to have some idealistic conditions for the boomer generation. And all these boomers, they're kind of looking back and saying, hey, you know what? We really whined quite a bit, and we stole basically all of the world's wealth, and just put everything on credit, basically crushing our children's generation. But we want more. Like, that's what the boomer generation is. We want more. Right? They want more before they leave this planet. And unfortunately, the world just doesn't have anything more to give to the boomer generation. But here they are in power, trying to take as much as they can up until the stroke of midnight. Well, guys, we do have future generations to look after. And I'm sorry, but we do need intelligent people who understand that coal and oil are essential right now, but also that we do have to get away from those OPEC countries. We do have to get away from Russia and all of these countries that act kind of as our enemies, right? And we do have to just get off of that kind of crack cocaine addiction to these fossil fuels, which are really destroying the planet. But at the same time, we don't have to be so religious about it that we're screwy in the head and kooky and shutting down all of these perfectly good industries that have been keeping America and the West in business. And we do have to make sure that we keep those essential operations available, as well as expand our ability to tap into those resources in the United States, in the West, in case of time times of crises or in times of war, that type of thing. So guys, there is room in the middle, and I really feel just horribly sad that we do have just these kind of crazy boomers, right? From Pelosi to Putin to Trump to Biden to all of these guys who are just so backwards looking. They can't understand what we need for the future. For example, the demographic shift that I was talking about, right? Where they're not giving us any new homes. They didn't give us any new homes. They refused to build new homes. They all wanted their perfect, 1950s kind of, suburban sprawl, huge backyard. They wanted all of the space for themselves, and they didn't understand that our generation was being pushed into, living with their parents, or pushed into so many roommates packed into one house, where you're just confined to a room, and that people weren't able to start families because they couldn't afford a house, because they weren't building new housing. And that is the kind of greed that we saw out of the previous generation. At the same time, they dramatically expanded civil rights, they dramatically expanded freedom of expression, and all of these freedoms, which frankly, the world was fairly, uh, totalitarian in those things, either from a religious perspective or from a dictatorial perspective. Even the US was, a real kind of empire, right? Which had a lot of countries under its thumb by the military, much, much harsher than today in the past. And so, guys, it's a mixed bag. We do have to count our blessings as well, but guys, we need desperately new leadership, and you can just see how they are just trashing. They are just trashing everything in the world on their way out of power, trying to just grab everything. And this last bubble, the everything bubble, right, which the boomer generation created, the boomer generation benefited from, and then which is crashing down on the entire world's head, including young Americans, including young Europeans, including young Asians, Latin Americans, Africans. All of the people of the world are feeling the pain from this. And if you started out your life right, and if you just crossed your T's and dotted your I's in the boomer generation, you should have been perfectly fine throughout all of this. A lot of that kind of philosophy of pick yourself up by the bootstraps, work hard and you can achieve, that was absolutely possible in that generation. This generation is having the problem of where there's a huge bottleneck. Okay, like you don't get health benefits making a YouTube. Okay, you don't get health benefits or retire, or the ability to retire when you're just doing social media stuff, and where the good jobs have been outsourced overseas to basically the Communist Party. And guys, I mean, I hate to go on this rant, but I'm just saying that we really need to get away from the dichotomy of our parents' generation, who really have screwed things up for the next generations really royally, to be honest. And they keep putting us in this kind of red and blue kind of wedge issues type situation. For example, immigration. We need immigrants because of that demographic collapse. Modern countries cannot sustain themselves without replacing the population. Now, if you're not having 3 kids, okay, and ask yourself, how many kids do you have right now? Do you have 3 kids? If you're not having 3 kids, then we need somebody to come into the country, right, to replace that, the kids that you're missing, and also to expand the economy, right? To expand the economy. The name of the game is expanding the economy. And if you have people either leaving your country, like Russia, right? All of those hundreds of thousands of men, right? And intelligent people trying to leave Russia right now because they're afraid they're going to be sent into Putin's meat grinder and just blended up into a meat milkshake over in Ukraine for nothing, just for the ego of these boomer generation backwards thinking good old days, the good old days of Russia, the good old days of America, back when we had World War II, back when we had the the Cold War, and all of this kind of idiocy everywhere. All right. We do not need that type of thinking. We do not need these type of things to be happening. What we need is to quicken the pace, dramatically increase the number of legal immigration that we have coming into the countries. Their kids make excellent citizens. They work hard. They have more lawfulness on average than local native born citizens whose kids tend to be, let's just face it, a little bit, taking these things for granted. And so there's less instances of immigrants going to jail than, just your kids, frankly. And this says something about, modern Western parenting. It says something about modern Western, society building, where we're allowing ourselves to basically fray at the seams, and it's all related to these type of culture wars that the previous generation has pushed on us. They're even trying to get us to have civil war. And what do they want to do? Just destroy the United States, destroy the West? Do they really think that something better is going to come out of that ashes? That's going to be 50 years of chaos and bloodshed and pain and suffering. And that is not what we need. We need new leadership. We need new vision. We need something that can help to expand this, expand the economy, expand the opportunity that we have here. And it can't just be illegal immigration. It can't just be, just trading, globally with anyone who wants to trade with us. We can't just be making, our enemy is our number one trading partner. It makes sense to have them our trading partners because we want to have something in common with people that we can, negotiate and try to build better relationships upon. But to make our entire economy dependent on China, to make, the oil systems of the world, especially from a European perspective, dependent on Russia, like that was insanity. That was absolute insanity. And our parents' generation just absolutely were not looking after us. And so now it's our turn to step up, and we have to find that new vision. Otherwise, the economic forces in the macro that are crashing down on our head right now, it's going to bury us. It's going to bury our children, and we have to turn this ship around. And no longer can we say the guys in power. Now we have to say, us. It's us who has to make that change. It's us who has to extend that olive branch to the other side and get past those stupid wedge issues that they keep forcing on us from their old style politics, from their old style needs. And we really have to figure out the right way for our kids. I'm just going off on this rant, but sometimes it just makes me so angry, guys. Let's go ahead and jump to the charts. Let's see what's going on the hourly on Bitcoin. We can see that the hour is about to close in 9 minutes. We did get a nice bounce here. We do have a little bit of a head and shoulders, inverted structure right here, which that measured move did play out perfectly. So forget who I was talking about that with, whether it was in the group or whether it was on Twitter or whatever. But Anyway, we did get that measured move. We did come back and retest actually the neckline of that head and shoulders. We did get a pretty good bounce. And so could this continue? I don't know. This is just the hourly, so it's a very short time frame. What I can say is that we did break down from this center line that we've been tracking, ever since back here on the, November, early November. We've really been just wrapping around this kind of center line. It goes all the way back in a Bitcoin's history, and we're underneath it and we're falling away from it. So that's not a good sign. That suggests to me that we could perhaps explore our lows before we get to re-explore those highs, if we even do get to explore those highs. And so again, like 16,900-ish, we really want to be above that, just in this local area, and we are falling away from it. And you can see we have fallen as low as 15,500-ish. So could we retap those lows or even a little bit lower? Maybe. We're going to have to keep watching. But just on an hourly basis, we do have a little bit of a micro bullish structure here. Nothing too energetic, you can see in this candle. That's not an engulfing candle or anything, but we did get a nice little purchase there, and tapped this kind of liquidity. And so if we do want to continue up, at least we're free to do so. Going over to the 4 hour, you can see the 4 hour looks a little bit more like a bear flag to me, to be honest. I mean, just kind of a proto one, but we can just wait for that to play out. The 4 hour does have 2 hours to go. So let's go ahead and take a look at some of these measurements that I have for it. You can see that we do have a volatility consolidation pardon me, a volatility expansion going on as of that kind of a bottom area that we hit down here. Just going to remove that head and shoulders. We don't need that. And ever since we bottomed out here, we did have a bullish divergence. Actually, this formed on the 1 hour, and that's coming off of that bearish divergence that really just drove us down to this point right here. We now have a bullish divergence. We are getting that effect. Will it continue on or not? I don't know. It looks like we are kind of breaking out of at least these wicks right here. Let's see if I can just extend that. Not really. We are getting rejected on it. So if we do have a bit of a parallel channel here, maybe we could expect to fall back down. And not sure if that bullish divergence has already played out, but we really should break that trend. Let's go back to the 1 hour to take a look at that structure just a little bit more closely. Yeah, I think I can just fine tune that just a bit. Yeah, you can see how we got nicely rejected off of that line, not even close to breaking out to it. So we do have to watch this area. And at least from a 4 hour perspective, all of these lines here are 4 hour numbers. We do want to see us getting above 16,603. Then I would suggest that the 4 hour might have some momentum. But I would just put a caveat that while that's on a momentum basis, I really do want to see us break out of this downtrend here. Again, this was a bearish divergence on the 1 hour, and I'm just using it as kind of a trend line right now because it does line up so nicely. And then we do have this bullish divergence that was formed on the 1 hour. And so, if that can break us out of this downtrend, and if we can hold above 16,603, then we might be able to see some continuation on the 4 hour. We will be expecting some type of reversal on our volatility. And so just right now we are in expansion mode. So that could continue up. I really don't have an expectation as to when our volatility will flip, but we are expanding, and eventually we're going to go into some consolidation, which might take us back down. But yeah, as we are expanding right now, again, for the 4 hour, 16,603 is what we're looking to get ahead of, and then also breaking above this little downtrend that we have here. Guys, we are going to have volatility bias to the upside as long as we're above 16,500 16,515 on the 4-hour, and I would say that a momentum bias above 16,563. So those are your key levels for the 4-hour. Moving forward, let's go ahead and go and check out the 12-hour. Yes, I know I'm on the 4-hour chart here, but I usually do that just so that I can get a little bit more detail. So I'm analyzing the 12-hour right now, just to be clear. You can see 12-hour highlighted over here. So for the 12-hour momentum pool, you can see that we are losing the 12-hour momentum pool. We really are going to close the 12-hour in, let's see, the 12-hour is going to close also in 2 hours. So this one may be more significant than the 4-hour. You can see, and this is going to be just right after I post the video, basically. We really want to hold this low of 16,595. If we close underneath it, where we are right now, that's going to be a bad look, and potentially we're just going to continue to the downside. But yeah, we really need to get 16,595. Otherwise, we will continue to the downside. Most probably. It doesn't have to happen, but just most probabilistically. Where am I going to be biased to the upside on the 12-hour is if we suddenly get a candle in the next 2 hours that takes us up to 16,658. Then I think it's front runnable. And if we get above 16,682, I'll basically see it as confirmed. If we get a 4-hour candle above 16,682, then I would say maybe we could come back and even retest the 12-hour volatility pivot, which is up here at 16,775. Now, because our volatility pivot is that low, and we are likely to be entering some period of expansion coming up, then let me just double check that really quick. Yeah, so we're actually just consolidating right now. Not really sure why I have that one all the way over here. I need to update that. Looking for this one. This is a new system that I'm making here just for a kind of shorthand, so bear with me. So we did have, some type of consolidation coming off of this move, and then we will be looking for expansion. So right now we're consolidating to the upside, but our bias is to the downside. And so, if we do enter a period of volatility expansion, wherever that should happen, after the close of, the next momentum pool or two, then potentially that could continue to expand us to the downside so long as we're under 16,775 on the 12-hour. Guys, let's go ahead and check out the daily levels. Okay, so here you can see that, and again, I just want to double check my color coordination. Yeah, you know what? I think I made a mistake on this 12-hour one because I wasn't on the 12-hour time frame. And so, yes, I was correct to have this back here. And yes, we are actually expanding on the 12-hour, which is interesting. So let me just redo the 12-hour. In terms of the volatility shift, we are already shifting, I should say, on the volatility, where our volatility is starting to increase. And so that does suggest that, as we're actually pumping here, there is a chance that we could continue, but we really we do have to get above that 16,775. So yeah, that makes a lot more sense. The 4-hour has the potential for bullishness. Also, the 12-hour has the potential for bullishness. It's just that the 12-hour is looking a little bit more suppressed. I think I will just stay on the time frame that I'm analyzing so as to avoid those confusions. But for The daily, you can see that the daily volatility is expanding to the downside, and when we enter a period of consolidation, it should be coming up in the next couple days, but we are still expanding to the downside, so that could suggest that there is further downside to go, especially if we lose the daily volatility pivot of 16,505. As long as we hold above this daily volatility pivot of 16,505, I am going to suggest that there is the possibility that when we enter some type of consolidation mode, that will be to the upside, contra, against this volatility push to the downside. So for the daily, 16,505 is really the key level to have a chance to consolidate to the upside. Now, that would just be a consolidation, and we would have to see more price action to suggest anything bullish. Where do I become bullish? Well, first of all, we've taken the first step, capturing 16,540. We're now in my momentum pool to the upside. Now, that just can be just kind of just nonsense, really. It can just be sideways action is what it could be. But if we do get above 16,693, then I will be biased to the upside. And if we get above 16,732, I would expect a push off of that. So 16,732 is where I become bullish on the daily. We are a couple $100 away from there, but anyway, it is possible. I think this is a good time to actually turn on our EMAs and check out the EMAs at the same time. You can see that we're just nowhere near a squeeze. On the 12-hour, nowhere near a squeeze. And also on the 4-hour, we're actually squeezing to the downside. So yeah, capturing some of these levels on the 4-hour, especially 16,612-ish, that's going to be significant to escape that EMA squeeze to the downside on the 4-hour at least. And then, since the 4-hour is bearish, that means that every time period above the 4-hour is also going to be bearish. And yeah, so that does definitely affirm what I said about, basically the move being front runnable on the daily above 16,693 to the upside, but with some caveats, right? Just a bullish-ish, basically. And then, pretty bullish above 16,732, where we could perhaps get back up to that kind of midline pivot that we've been talking about at 16,876 before perhaps doing a couple more tests. Let's go ahead and move to the 2-day. For the 2-day, we do see the same thing, this kind of bearishness. We do have a little bit more of a naked candle here, which we could claim, on our way to the upside, all the way to 16,675, at which point I will become bullish and think that we could potentially continue. Why do I think that? Because we do have some of our momentum thresholds down here at 16,524. However, this does look like it would probably come in some form of consolidation. We do have a 2-day pivot, all the way up here at 17,115, and that just suggests it could be a struggle to get above that. If we do get above 17,115 in a couple of the next 2-day increments, then that would look significantly more bullish, but until then, I can see that we do have a natural range on the 2-day between 17,115 and 16,525, where we are just playing in the lower end of that. And so, we are in the momentum pool for the 2-day, so that does suggest that we do have a chance to continue to pump up. And then you do see the 4 EMA here pretty much lining up with the 2-day, crossover into bullishness line. And that one, could be where we just bump our head and continue to the downside. So pay attention to 16,675 on the 2-day if you want to be bullish on those moderate time frames. Getting a little bit more into the higher time frames, let's go ahead and take a look at the 5-day. 5-day looking significantly more bearish than the other time periods. If you do want to just have some perspective on the 5-day, you can see that our momentum baseline is all the way down here at 15,754. So this thing could drop all the way to our, kind of our monthly range lows here, right? The last couple months, it could drop all the way to the bottom of that 15,500-ish area. And really, it wouldn't be any skin off the back of the 5-day. And where the 5-day does start to have a significantly higher likelihood of going to the upside is going to be above $17,051. So if we can get above $17,051, then I would suggest that we're going to flip the 5-day around. However, and this is different from the other time periods that we've analyzed so far, the 5-day actually has a bearish crossover, which we just passed through, unfortunately, on our way down. You can see that we're outside of the 5 days momentum pool. And so, being outside of that momentum pool does mean that we've now accrued momentum to the downside and significant momentum being underneath my crossover level. So this thing could, on the 5-day, which could take multiple 5-day periods to play out, within there could be ups in between there. The 5-day is suggesting that it potentially wants to continue to the downside. So let's see if the lower time frames can kind of prevent that from happening. But again, what do we need to accomplish to basically turn it around? The first thing that we need to do is get 16,918. If we are above 16,918, then if you're trading on the 5-day, I would just feel a little bit more assured. And if you want to have a higher likelihood for the upside, then we need to get above 17,053. Now, I'm not going to analyze the weekly. I think I will in the future, but I do have a theory that we're operating on the macro off of the 2-week charts. So I'm going to just supplement my analysis with the 2-week charts instead of the weekly, just for the time the time being until we can get a little bit clear idea of what's going on. But right now we have been in an expansion phase essentially to the downside on the 2-week. And so you can't see us just, yeah, we go sideways sometimes, but just overall, we've been thrusting to the downside. And this red line, is basically a consolidation period. We will enter at some point a consolidation period. Now, we have no idea when that could be, okay? It could take a while. But, once we cross into that consolidation period, then we will have finished expanding to the downside. Okay, you understand? We're going to have finished expanding to the downside. And I do believe that Bitcoin is operating on the 2-week chart on the macro. Okay, and you can look at the RSI, you can look at those things and understand that the 2-week is being incredibly powerful. And so let's actually do that. Let's take a look at the 2-week here. And you can see that overall, this trend is showing us like the previous bear market had this diagonal down here, and then where it broke out, then we had a kind of a run and consolidation before the mega run, right? Here you can see the same thing, downturn, right? And then look, we're starting to break out of it. However, we're having a volatility push continuing us to the downside, sort of like what we had right here. And it's not finished yet. We don't know when it's going to end. But when it ends, we're going to have a period of consolidation. And yes, we could have a bounce up, but it would just be consolidation. So it probably wouldn't be the most enthusiastic thing that you ever saw, but it would be some upside. And then, we would end up eventually having another expansion phase, which would take us, significantly to the upside, perhaps after checking back to the downside as part of the consolidation that's coming up. And so, guys, let's just go back to the 2-week chart and just take a look at what are some of our key levels here. Just like the 5-day, you can see that the 2-week is underneath its alpha momentum pool. So it's just completely lost the pool and is just starting off completely drowned. Now there is 3 days left on this 2-week analysis, and so in 3 days we should have a better perspective as to what's possible on this chart. But for right now, it does look like we are more likely to explore the lows than we are to explore the highs, with one caveat. We held on to the 2-week um, volatility pivot. Okay, let's get a cleaner label here. Volatility. Okay. Yeah, and so what does that mean? That means that if we do have a change in volatility, whenever it comes up, we don't know when it's going to come up, but if we do have a change in volatility, as long as we're above 16,170, then there's a likelihood that it can actually take us to the upside. And since there's only 3 days left in this 2-week period, that does suggest that 16,170 is a really important number that we have to pay attention to in the next 3 days. Okay, so in 3 days, if we're close above 16,170, and our volatility to the downside pinches off, then there's a good chance that we could hang on and perhaps even explore the upside. Now, what happens is if our volatility doesn't pinch off in the next 3 days, which, by the way, it looks like it's getting pretty pinchy, okay? But let's just say that it just opens up again and we just continue to expand to the downside. Then what's going to happen is that we end up actually having to wait another 2-week period, essentially, okay? We'll have to wait another 2-week period to get some confirmation on that. Guys, the levels that I really want to see us hold are a 16,741. If we could do that at a minimum, that would be a good sign. And 16,741 would be just a good sign that we've stopped falling. But of course, we're underneath that right now. And confirmation of that would come around 18,068. So there is a bit of work that we need to do, being 16,600 right now, to get to 18,068. But if we do get to 18,068 and we're able to hold above there with a couple daily candles, then good things could really suddenly start to happen on the Bitcoin chart quite rapidly. So that is the key level that we're looking for off of the 2-week chart. And guys, I will try to improve how I'm doing this volatility measure. I just like to have stuff up on the board that we can see where our last one is. Maybe I won't include this upcoming level, and maybe I'll change the color scheme to better reflect the indicator itself. So if we go over here, you can see we were in the red zone. So maybe I could suggest that we were red at that point, and then blue would be the next one. But instead of jumping to this chart all the time, I just want to just have a quick glance where we are. And so I could say, aha, yeah, we're consolidating to the downside right now. We're basically pushing to the downside. And the next time that we flip around, then potentially we could have as long as we're above 16,170, there's a high likelihood that we could push to the upside. So I'll work on that one. I am trying to make a momentum pool for every major time frame because I think that people are trading off of different time periods. And if you're not trading on the daily, if you're trading on the weekly, then the daily momentum pool really doesn't mean that much to you. On the other hand, if you're trading on the on the daily, you definitely want to see all of that detail. So previously I was blending it just all into one chart where I had like a bullish, uber bullish, kind of bearish, and that works, but it's also very dumbed down. So if you have any opinions about this, let me know what you think, because I am just going to continue to experiment with new styles during the bear market. Um, because let's face it, not much is going on, right? There's not many people visiting crypto, new crypto channels, okay, in a bear market. It's really going to be the next bull market when, a lot of people start to just show up out of nowhere and things explode. But for now, this channel is really about you guys. The few people who are still listening, the ones who are, the real ones who are really just interested in what's going on and really trying to figure out that key moment of entry. Do you like when I just bundle everything together into, one scale that basically takes everything into account? Maybe I have one of those, yeah, like this, right? Where I just have this, and it's just for every time frame, okay? It just I just have, bullish, solidly bullish, uber bullish, right? That kind of thing. It's very simple to follow like that. Or do you prefer when I have these different time periods and we can say, oh, this is the 5 day, this is the 2 week, right? This is the daily. Even this is the 4 hour, so that if I just post something, you could literally trade off of the 4 hour, as opposed to having some just big scale that you know you really wouldn't know what to do with it. I think on the on the 4 hour, if I had something like this on the 4 hour, it's kind of neglected. But on the other hand, if I have something like this for the 4 hour, then you can easily see that what you would need to do on the 4 hour. So do you prefer that kind of nuance, that kind of detailed look on the different time frames, or do you prefer the simplistic, easy overview, which just gives you kind of the overall kind of setup that we have on the bigger picture? Um, it's up to you guys how I invest my time here. Obviously, I'll do whatever I find interesting, but hearing your opinions could definitely tilt me in one direction or another. Guys, I think I am going to wrap it up there. Basically, I do want to have a little bit of a conversation on what's happening on the stock market. Let's go over to the Nasdaq here, and there's our falling wedge. Let me turn off these EMAs. Let's go to the daily just to get a little bit more detail here. And you can see that the target for the falling wedge was right here. Where did we get a little bit of a bounce at? Right there. And so we are essentially in this kind of little black box zone of where we might be able to bounce based upon this rising wedge. If we go over to the S&P 500, I marked it out more clearly, and you can see for the S&P 500 futures, I had this level for the last couple weeks, rising wedge breakdown target. And again, we were up here, right, when I established that target. And so, you guys could have taken that short on the S&P 500, and everyone's saying, "Oh, the S&P is crashing, the S&P is crashing." Well, guess what? The Alpha Fam knew, okay? We knew for a couple weeks. So, You know, like you could have had this short, or you could have had this short, and basically we've been having this target the entire time ever since we were basically in this area and we were able to project this rising wedge. I've had this target for you guys. So again, the alpha fam is just killing it. This is the stock market, it's not crypto, and we are capturing these major moves. Now, from this point, well, the measured move is essentially complete. Okay, this may have been just a little bit lower than it needed to be. Maybe that's the actual thing that we kind of wicked to. Now we need to see, do we hang on to this diagonal and do we get another push? Or are we going to break down? Obviously, I've assigned these key levels to the S&P 500 for a reason. Let's see if log looks any better. No, I do think this is on linear, which is good. I prefer linear. And so you do see how price action is traveling along these three levels here. And you can see we held it here and here and here. So it's been very respectful, this level, this level, this level, this level. It's been very, very respectful for multiple years. Okay, even going back down here, you can just use your mind's eye to project those levels. We're being fairly respected in terms of bounce zones. So we could fall down on the S&P 500 futures, right? The ES1, we could fall down all the way to 36,058 before our next before our next little bounce. And then after that, we start to talk about these kind of horizontal zones where you see this major price action, the previous COVID high, etc., and where we might break our previous low in this bear market. But for right now, we are just hanging on to the middle of this area, which, by the way, has never been the best area to hang on. We should get a better bounce off of this bottom level. So just in my opinion, if we're not going to just break out now out of this downtrend, then I do expect the S&P to probably get down to this 36, 50-ish area. Eventually continuing to retest these bottoms. However, we could get a bounce and get back up into this third tier, this third layer up here, which is common, right? You can see we just kind of push up there, kind of push up there after a double bounce, push up, right? Couple bounces, push up. And so we could do it again, and I may just have to extend this in the future. And then maybe we could even get a double top on the S&P before we have a bigger crash where we do something like this, where we could do something like this. See what I'm saying? And then maybe come back down eventually to retest these areas, freak people out, and then continue on our way. That's definitely possible. Okay. Um, what's also possible is that we lose this structure and we just really do something disastrous. Okay. So I'm going to keep you abreast of this stuff, but just understand that we do have um, potentially scary times ahead of us if we don't catch ourselves on this diagonal, if we don't catch ourselves on this horizontal here. Okay. And don't say I didn't warn you, okay? Because I've been talking about this stuff longer than anyone in crypto. Okay. I was essentially the first, even though I'm a very low volume YouTube channel, almost no one watches me. I was the first to be talking about this stuff, okay, almost a year ago, well before it was even on the radar of any of those guys like Crypto Banter and all these other guys, okay? Um, However, I don't keep up on it every single day because we do just make projections for the moves. And, when we hit this level down here, I projected we're going to bounce all the way up here back to the trend line. When we got that rising wedge, I projected we're going to break down to here. So it takes weeks to play out on the stock market, and I don't have to just keep updating this stuff the way that you have to keep updating Bitcoin, because Bitcoin is kind of schizophrenic, right? Like it doesn't know what it's doing. But the S&P and the stock market, they're moving in pretty predictable patterns, which I've been describing in a highly accurate way, using a little bit of out of the box thinking compared to some more traditional analyst. But guys, I am definitely going to wrap this one up here. Um, I guess we could just say hello to the VIX really quickly. We're just hanging out in the same area, just kind of consolidating to the side. Nothing really scary going on yet. Okay, so a lot of people talking about the VIX, the potential for us to just go catastrophic, and but so far we're just going sideways. Dollar, pretty much the same story, okay? Like we do have this falling wedge, which could pump back up, and it could have nice targets, to 107, even 1012, okay? Like it could definitely pump up, but so far we're just going sideways, so nothing to really speak about. But if the VIX and if the dollar, if they both start pumping up like crazy, then watch out on the stock markets and watch out on crypto. Okay, and they are poising themselves ready to do that. So we do have to be mindful coming into the first quarter of 2023 that there still is the possibility for at least one more smackdown, okay? Like really harsh one, which could last us to the middle of 2023. But at the same time, if these things just remain suppressed and just go sideways, because sideways is always an option. You don't have to pump, you don't have to dump. Going sideways, okay, time is the same thing as movement on charts, okay? So if you just burn time, then you can also regulate the indicators, and so we'll find out. We'll find out. Okay. Usually you don't just go sideways though. Usually you do move in a predictable kind of technical way, unless the world throws you a curveball. And so we are going to follow this stuff. They're starting to break bullish, but they're just going sideways. So nothing to instruct yet, nothing to, you know, really give any advice about, that sort of thing. But again, if the VIX and the DXY start pumping, then watch out for the stocks and watch out for crypto. Okay? As long as they go sideways, we can trade bullish possibilities. Okay? Sideways or down on VIX and DXY, we can trade bullish possibilities. All right, guys, ending it there. That's your alpha for the day. Stay safe and happy trading.